Hello and welcome to Follow the Money. I'm Gerg Cahiles. Join us as we explore the tools and insights you need to jumpstart your financial journey. Today we take a deep dive into the Philippine bond and stock markets, from short-term yield movements to the government's ambitious defense bond plan. We begin with a closer look at where investors are parsing signals from bond auctions, inflation trends, and new government borrowing plans. Last week's yield curve showed mixed signals, short-end rates ticking up while belly yields softened. Helping us connect the dots with her expert insights is Cristina S. Ulang, the first Vice President and Research Head at the First Metro Investment Corporation. Good afternoon, Cristina, and thank you for joining us this afternoon.
Hi, good afternoon, Gerg.
All right, let's start off by talking about what happened last Friday. The yield curve, as I said, showed mixed movements, the short-end yields rising while belly yields fell. What factors can you attribute these movements?
I think we will continue to live with this volatility because of the uncertainties happening abroad. And it's really the U.S. Treasuries that are providing the background for this volatility. There's a lot of uncertainties trade-wise, policy-wise, and so the investors are like getting in and out, trading the market, and in the most liquid portion of the curve, which is the belly. But overall, over time, we expect the BSP to cut rates, do a catch-up because we need to stimulate the economy. It's just that the 10-year benchmark is still very sticky on the long end, and it's proving to us that there is this worry and concern, some jitters over the possibility of more debt supply because there's been this forecast by the IMF that GDP growth might slow. And of course, if growth is going to be slowing, then you can just imagine what's going to happen to our tax revenues. Although we have room to improve our tax take, our tax effort ratio is actually like 16%, 15%, very healthy. And there's room to improve that by pushing for greater efficiency in VAT collection. I think that is what the IMF has told the Philippine policymakers. And so we will be able to bridge the budget deficit, comply with the commitments made under the fiscal consolidation program. And so that's going to moderate the pressure in the long end of the curve. And of course, inflation is going to help us. The May number, the inflation for April is going to come out early May. And I think it's going to show still room for improvement given the very low prices of oil abroad. It's down like 12%, and the global rice prices also is down 20% year to date. That's very helpful for our inflation picture and our yield curve movement.
If I may share, yesterday we spoke with former BSP Deputy Governor Diwa Gunigundo, and he said that their inflation forecast for April is roughly, it's quite slightly higher than March, around 2 to 2.5%. And he also adds that the BSP, while the BSP is showing some dovish stance, it must be cautious in implementing rate cuts. With the current market instability, as you mentioned, the market jitters, how do you think this will affect the bond market?
I think the priority really is going to be growth because inflation is very much on target. Remember that the BSP is eyeing like 2 to 4% target and has even lowered the full year inflation forecast this year, like from 3.5, I think it's lower than 3%. And that's a big revision of the inflation picture. So if the inflation is going to be benign this year and growth is going to be slower, then growth, I think, is going to be the priority. And so I believe there's going to be a rate cutting catch up in the second half of this year. And therefore, the entire yield curve, short end and long end, is going to be reflecting that, digesting and pricing in the rate cuts, maybe 50 up to 75 basis points in the second half of the year, so that we are able to hit our GDP growth target of maybe even close to 6% this year.
Okay, I think we lost Cristina right there. Cristina, are you still?
Hi.
Yeah, go ahead. Continue.
Of course, yes. As I was saying, growth is going to be the priority of the BSP. We need to stimulate growth because there is this uncertainty coming from the trade sector, global trade policy uncertainty, and so that's going to affect our exports to the US. Our overall trade performance is going to be moderating. Therefore, we need to stimulate growth, and I think the BSP will prioritize growth by cutting interest rates, maybe 50 to 70 basis points in the second half of the year. I think the yield curve is going to be looking forward to that event and will be digesting and pricing in the low inflation picture that underpins the BSP's plan, the trajectory of the BSP key rate.
And from what I understand, you're saying that the BSP will provide a sense of stability in an overall picture and targeting the said growth that you mentioned.
Yeah, of course, because we need growth more than ever because the IMF and some of the multilateral and investment banks abroad have given out the revised forecast of GDP growth this year, which is way below 6%. So we're going to be like doing based on their forecast, just going to be like 5.6%, 5.5. And I think that's very negative as our debt management is concerned because if you have a growth that is slower, then your debt to GDP ratio is going to be affected and will not be showing a very good ratio, a very good number from the standpoint of credit rating agency. And so I believe the BSP will really do rate cutting catch up in the second half of this year.
Well, what's your interpretation of the bond market's current expectation on inflation and interest rates?
I think the demand market is looking like a lot steeper now. We're seeing the short end moving lower, and that is expecting that's in light of the benign inflation picture, revised lower inflation by the BSP from above 3% to below 3% this year. And then for next year is close to like 3%, 3.3 coming from 3.7. So it's all throughout lower inflation because you have global oil prices going.
Okay, so we will try to reconnect with Christina. Yeah, she's back. Okay, you're talking about the lower prices of oil in the world market. Continue,
Yeah,
please.
it's not only oil but also rice prices, which is down 20%. And so the combination of this low global oil and rice prices is going to be like favorable for the BSP. It's really going to give flexibility for the BSP to proceed with the rate cut. And so the yield curve is going to be like pricing in all of these developments.
Definitely, we're all hopeful for that. But Christina, how do you see the yield movements for this week's trading session? What's your forecast or outlook on what could possibly be the driving factors as well?
Remember that inflation is going to be coming out for the month of April, and that's going to be key to the short end of the curve. It is going to be sustaining the downtrend, and whether the long end is going to be like sticky on its current level of like 6.35. Actually, it has gone up from the auction rate of like 6.35 of the new benchmark. And what's happening there is the fact that investors are demanding a risk premium for the long-dated securities given the uncertainties in the long run about growth, Philippine growth, global growth, and whether taxes would be sufficient to cover our budget deficit, and whether the budget deficit targets under the Philippine fiscal consolidation plan will be hit or whether it is at risk. So investors are demanding a little of a premium for the long end of the curve. And so we are seeing a steeper curve.
So how can we achieve that? Siguro, mga specific actions that you can suggest?
I think the priority of government is going to be like restoration of our growth, stimulating the economy by supporting infrastructure spending, doing more of the public works through DPWH, and seeing to it that the budget is really spent so that it impacts the economy as a whole. And if that is achieved, then we will be able to have our tax targets achieved, our tax revenue targets achieved. And also government needs to push for a greater VAT collection efficiency. That was pointed out by the IMF. It is one area which can be improved so that we are able to generate the needed tax revenues under the fiscal consolidation program without introducing new taxes, because new taxes are very contractionary in impact on the economy, and that's the last thing we need to have. We need growth, more growth going forward, and I think government will have to do a lot in terms of tax collection and tax revenue generation.
More tax efficiency, tax collection efficiency. But on another
Yes.
topic, Christina, let's talk about the proposed defense bond. Well, basically, the government wants to sell those so-called defense bonds to modernize the military. How viable is the government's plan to issue 300 billion peso in defense bonds, especially considering the possible overlap with the upcoming retail treasury bond issuance?
I think we will know that only when they begin to test the waters, they begin to do market sounding and try to test the temperature, the appetite, whether it's something that investors, fund managers are willing to take on in their portfolio. Given the current uh, preferences, I think it's really the GS government securities which are the priority, because they are tested instruments, and from a capital allocation standpoint, there is already a set standard on just how the capital weights are going to be assigned. Now, with respect to the defense bonds, we have yet to know what is going to be the capital risk weight of these bonds. Is if these are going to be issued by an entity, or is this going to be directly a national government indebtedness? Is this going to be guaranteed? So the fee and how long will be the tenor of this bond? So these are some of the considerations. Will there be a guarantee? These are some of the considerations. And then at what rate? It all depends on the pricing also. Pricing is very important, because there's a saying that everything is for sale at the right price. So the market appetite can be stimulated given that the price is right.
Do you think there will be issue on market absorption capacity when, two consecutive big ticket bonds from the government will be issued?
It's really a question of appetite for this type of bonds, and whether the risk premium are going to be way above, and whether government will be receptive to the very high risk premium that can be demanded by the market. That's one consideration. And then second, aside from the risk premium, the liquidity condition in the market also. So are we are we going to see lower interest rates? With the BSP cutting interest rates, as I think it's going to release a lot of liquidity in the system. So that's going to be helpful in boosting appetite for this fund. So when you have a scenario of low interest rates, low inflation, then the appetite for bonds. But this is a novelty. I think it's very new in the market. It's a new concept. So really the market needs to be tested.
Kumbaga, the people are a bit interested and curious about this novelty that you mentioned. But meantime, Christina, we will take a short pause. When we return, how could the defense bond impact investor confidence and fiscal credibility? Keep it here on Follow the Money. Welcome back to Follow the Money. We are still with Cristina Ulang of First Metro Investment Corporation. Well, Cristina, you mentioned that this defense bond is a novelty. This is something new and may pique the interest of investors. But what are the implications for investor confidence if this defense bond lacks clearly defined budget allocations for repayment within the DND's annual budget?
If that is going to be a concern, then it's going to form part of the risk profile of the bonds, and that's going to be commensurately considered in terms of the pricing. So everything is going to be imputed in the price, all the riskiness of the features of this one, the tenors, and how it's going to be use of proceeds. All of these things are going to be considered by the investor, and I think the price is going to be reflecting all of the risk, and I think the market will have to clear at a certain price, whether government agrees to it, investors agree to it. They have to come to a certain point of agreement when it comes to the price. So I think the important thing is for the system to have so much liquidity so that the appetite is there with respect to this very new debt instrument.
Well, you're talking about the price. Do you have like a study as to what is the acceptable price for this particular bond?
Mhm. Well, pricing is a function of the appetite of the market and the liquidity of the market at the time it is issued. And also, there are also sweeteners, maybe features that may lower the risk of this instrument, and so that is something that investors are going to be considered. So it is a level at which the investor and the issuer are going to meet. So we don't know really how much would be the spread of this instrument over the prevailing secondary market benchmarks.
Okay.
So
Now,
I think until we know the specific features and tenor and guarantee and all characteristics of this instrument, that's the only time we can determine what will be the spread of this and the risk premium that investors are going to be demanding over the benchmark.
it's like a wait and see scenario for now. But given the constitutional priority for sectors like education and health, how might the defense bond affect the perceptions of fiscal responsibility and budget sustainability?
Mhm. Well, the use of proceeds of these uh, defense bonds, which may be used for defense, as the word suggests, as the name suggests, is something that is very unique, and this, I think, is has its own set of geopolitical motivation, which is very relevant to the time that we are living in. The world is being driven by geopolitical consideration. It is not only the Philippines that is concerned about defense and about alliances, and then who are our friends, who are not, who are we gonna be allied with, and so this is something that is now very unique to our times, and so it is something that is now being floated around, and it's a novelty. And I think this is going to be viewed from the standpoint of the needs of the time.
All
And
right.
investors who are in that space, whose mindset is appropriate to that type of instrument, I think they are the ones who are going to be interested in this type of instrument and the rewards that they're going to be getting from this instrument.
Now, Christina, the Philippine government raises 300 billion pesos from new bonds after selling 10-year fixed-rate treasury notes amid strong demand for longer-dated tenors on expectations of rate cuts by the central bank. So what can you say about this?
Mhm. I think it was oversubscribed three times. This is the 10, the FXTN 1073, and I think it is just reflective of the confidence of the investment community with regard to the fiscal viability of the government. And I think it has something to do with the resilient growth that the Philippines is going to enjoy despite the uh, uncertainties globally, and we have really growth pillars to ensure that we are able to produce the kind of growth like our BPO and our OFW remittances. These are our pillars of the economy, our household consumption, and this is going to provide the government with ample resources really to fund the needed projects and the growth aspirations of our country. So I think it's important that the government focus really on the growth. That is the real target now, given that inflation has gone down and that the peso has really stabilized given the weakness of the dollar.
But what does the overwhelming demand for that new 10-year FXTN suggest about investor sentiment toward long-term government debt, especially in light of the BSP's rate cut and anticipated easing cycle?
I think it's a vote of confidence, very strong vote of confidence for the bankability of the fiscal house, the Philippine government as an issuer. There is a lot of also interest in locking in the long end of the curve for a very rewarding coupon rate, 6.35. Knowing that interest rates are going to fall, then it's
Okay.
best to lock in the long end of the curve and then also uh, harvest the price appreciation that will come along after the BSP begins cutting interest rates. So you have two sources of rewards and return, which is really the coupon and the price appreciation.
Okay. Earlier, you predicted in Bilyonaryo News Channel's Business 360 that the PSEI will fall to the 5,800 level, and your prediction actually materialized on April 7 after it fell 5,822. So what is your outlook in PSEI this week and for the rest of the year?
I think the PSA is going to be like testing the 6,300, 6,400 level as the inflation ahead. This is going to be ahead of the inflation. And if indeed the inflation beats the expectation, maybe like around 2%, close to 2%, 1.9, 2.1, 2.2 for the month of April, I think this is going to be a positive catalyst for the PSA to test 6,300 up to 6,400. And of course, the corporate earnings that are coming out, very encouraging. The banking sector is showing that lending growth is very strong, double digit, 12% in the first quarter. And then the earnings of the banks have been meeting expectation. BPI grew its earnings by 9% to 16.7 billion. And then BDO also registered a more muted 7% growth to 19.7 billion. But these are very good numbers beginning of the year. We're not seeing any slowdown as far as lending is concerned. And the loan-to-deposit ratios of banks are approaching a pre-pandemic level of like 89%, 78, coming from 70%. And the good thing about it also for banks is the NPL ratio. They're not deteriorating even with the this threat of slowdown and the high inflation that we've seen last year. Is still the NPL ratio are very tamed and tempered, 2.3%, 1.7%. Very strong, healthy banking sector, which is a pillar of the economy also.
Yeah, indeed, strong and encouraging numbers. But very quickly, before we let you go, Christina, what is your GDP forecast for the first quarter and the whole year? And of course, please include the inflation forecast as well.
We would have wanted an economy that is free from the global trade uncertainty. The
Yeah.
original forecast was like 6%,
Yes.
even better than 6%, maybe an overshoot of. But because of the Trump tariffs and all of the prolonged agony over the trade deal resolution, which is not in sight and which could be a structural thing, the tariffs are going to be here for a long time. It's a transition actually from low tariffs of below 10% global trade. Now we're seeing tariffs of more, more higher, 10%, 25%, and for China, especially higher, 145%. So the outlook really is very tough, very challenging. But still, the Philippines is the least exposed because our trade with the U.S. is just about 2. I think it's 12 billion in our exports, and our tariff is just 17%, the lowest among the ASEAN countries, 17%. So that's going to give us an advantage, and we will record still one of the best growth in here in Asia. Of course, India and Vietnam would be ahead of us. And so we are seeing 5.8%, 5.7% for GDP in the first quarter.
Okay, how about
And for the whole
inflation?
year, 5.8%.
Okay, how about the inflation rate?
The inflation rate is going to be way below the original forecast because beginning of the year, the inflation forecast was thought to be like above 3%, but now the BSP is saying it would be like 2.3%. So we're a little above that, 2.6% for this year.
At least for the GDP, you agree with
For-
the forecast of the World Bank, which is roughly around 5 to 6%. All right.
We're higher than that.
All right. So we are very hopeful and optimistic. Thank you, Cristina Ulang, for joining us
Sure.
this afternoon. With
Bye-bye. Thank you.
With so many moving parts, inflation trends, bonds issuances, and fiscal risks, investors need to stay agile and informed when navigating both opportunity and uncertainty. Thank Cristina S. Ulang, the first Vice President and Research Head of the First Metro Investment Corporation, for giving us her valuable context. Before we go, some advice from Amazon founder Jeff Bezos. Given a 10% chance of 100 times payoff, you should take that bet every time. And that's it for today's edition of Follow the Money. I'm Gerg Cahiles. Thank you for watching and keep it here on BNC, the Bilyonaryo News Channel, always on top.